The outbreak of COVID-19 has had an extraordinary impact on the global economy and triggered widespread social upheaval. Worldwide, clients, investors, analysts, market watchers, and citizens are grappling with uncertainty and in need of insight to guide their decision-making. Starting this week, the Aga Khan Economic Planning Board for the United Kingdom is launching a series of pre-recorded webinars, Managing Through Disruption. Designed to help answer the questions that matter, we discuss the impact that COVID-19 has had on Jamaati businesses, self-employed, and landlords. Jamaati members share their experiences and their unique perspectives on the outbreak's effects and how they are repositioning their businesses for the future. These recordings are available on the.ismaili. You are watching Managing Through Disruption, Implications for Residential Landlords. On the panel, we have Mohammed Sachedina, CFO of Liberty Gold, a residential development company and a private residential landlord. Karim Pabani, Director of Bainmark Property and Chartered Surveyor, expertise in commercial property and portfolio investment management and asset enhancement. This session is moderated by Aleem Tejani, EPB board member responsible for business support.
The UK government has taken unprecedented measures to assist both residential landlords and tenants. Can you walk us through some of these measures?
The first thing that governments are doing is they are encouraging all lenders and almost making it mandatory for all lenders to provide payment holidays for those landlords whose tenants may be struggling. There's no official decision for tenants not to pay rent or to have payment holidays from rent, although there are lots of groups lobbying for and against this, obviously. And I think that the other key point to bring up here is that repossessions have been suspended for 90 days. So even if your tenants are in arrears, there's no way of actually serving notice on them.
And you mentioned the mortgage holidays. Is that for a period of time? Have the government specified how long that's for?
Yeah, so it's up to 3 months initially, but that's obviously on a case-by-case basis. And then if you do want to apply, there's certain conditions that you must fulfill before you can get those payment holidays.
Okay, so expanding on that point, what's been your own experience of getting mortgage holidays from your lenders? And are there any downsides of doing so?
Sure. So the first point to bring up is you have to be in good standing with your lender. You can't have existing arrears. Your account has to be up to date. It's relatively busy on phone lines. So the best way to contact lenders I've found is to email them or use their online forms. But again, there are pitfalls of actually applying for these holidays. They're not holidays in the sense that the interest hasn't actually been forgiven and payments haven't been forgiven. That the interest payments will still accrue and they'll be deferred to either the end of the mortgage or an agreed payment plan with the lender. The other thing to note as well is that there is no guarantee this won't affect landlord's credit. There could be situations where some lenders could file for issues on or file for notices on your credit file. So you've got to be really careful about how and when and if at all you do apply for these mortgage.
The key is you've got to apply, right? You can't assume that it's a given and stop your direct debits.
Correct. You must get it in writing. And I think before you do that, it may be it is very important to speak to your tenants and actually see whether they can still pay a certain amount of rent or the full rent in any case, because there isn't, again, any legislation to stop renters from paying rent.
And if the amount of interest for those 3 months is added to the mortgage, does that mean you're paying interest on that as well? Does it make it more expensive overall?
If you decide to add the payments to your mortgage, obviously your balance increases and therefore you are paying interest on payments that you should have made. So the amount of money you pay over the long term will be more.
Okay, so I think it's very important that everyone does their own calculations, speaks to their lenders before taking any action, yeah?
Yeah, absolutely. And understand the impact of what that's going to do to your mortgage term.
Okay. And during this lockdown, what else should landlords be doing to fulfill their obligations?
So as I mentioned, I think be very proactive without obviously offering any payment holidays. Try to understand your tenant's financial situation, if they've been affected directly or indirectly by the crisis, and try to agree the most amicable solution going forwards. You aren't being given any dispensations around the safety obligations of landlords, so you still have to fulfill your gas and electric safety checks. If you've got any licensing requirements from the local authority, you still need to fulfill those as well. Obviously, access can be an issue, and also getting engineers and workmen out to site can also be a problem. So I think that the thing that people need to consider is anything they do, any requests they make for these services need to be documented. So in the event that you can't fulfill your obligations as a landlord, you've got a record to fall back on if you need to prove that you did try and everything you could to fulfill that obligation. And like I said, I think conversations with your tenant are very important at this point in time. If you can avoid payment holidays, you can do that by having a conversation with the tenant and agreeing a fair payment plan with them.
Okay, yeah. So the key is just be very proactive in communication with your tenant. So let's bring Karim in here. Karim, as you know, we have very strict social distancing measures in place. What does this actually mean for landlords who wish to rent out or sell their buy-to-let property?
I think when you're looking at a vacant property, one of the biggest things is you want to get as many people around the property, and you want to advertise it as best as you can. And I think this particular time in the market is a time when you're physically unable to do that. And I think one needs to look a bit wider at what you can do. There are two ways you can look at vacant properties in this market. One, you can say, well, we can't do the viewings. A lot of agents have furloughed their staff. We can't get people around the property, and take the view that we're going to be very defensive. And that means reducing costs as much as we can. Those costs, Mohammed talked about as partly the mortgage costs, where you can talk to buy-to-let lenders. And I think you've got to check the terms and conditions, as was said, and you've got to be very, if you can afford it, fine, but if there's no rent coming in, and don't also take it for granted that lenders will give you that payment holiday, and look at your own financial situation. The second thing you can do is, in terms of reducing costs, is call the local authority. Some local authorities have discretion on empty council tax. Don't take that for granted, because it is a discretionary type relief. But if you can reduce costs, that's another way of looking at it. Speak to utility companies. Also, if you've got a rate that is quite high, you could also speak to your lender or mortgage broker, because without doing, one of the issues at the moment is refinancing and getting new money or further advances because of the need to revalue the properties and surveyors not being able to physically go round to the properties. But if you were doing a simple thing like a rate change, that can be done directly with your lender or through the broker that you originally got the mortgage through. So minimizing costs as much as you can. And also, if you have a flat, your service charge that's payable to the landlord, call the landlord's managing agent, see if you can work out a payment plan with them, or just have a freeze on that. And what you'll tend to find is, what my experience is that some of them are just freezing those payments and not adding interest on, just for a month or 2 months or up to 3 months. So it's worth a call. Don't assume that you're not going to get it. Do pick up the phone. On the positive,
are there any other solutions to avoid having a void property. So for instance, I've heard that some agents are doing virtual viewings, and both for the sales and the letting side of things. Or could you approach the council to house key workers or anything like that?
Yes, so you've got the other option, which is taking control and using the market to your advantage. One is that you, as you rightly say, virtual viewings are taking place. As long as the property, as Mo said earlier, has the relevant certification in terms of electrical certificates, EPC, gas safety where required, and you've got photographs of the property or a video or a virtual thing, you can liaise with approved providers, especially from local councils if you don't mind your property being let out to a council tenant. Those are possibilities, because approved providers are saying to us that where flats are available and they've got the appropriate certification and you can see inside them and they meet all the health and safety criteria, then that's another way of getting tenants and minimizing your void periods.
Okay. We talked a little bit about refinancing properties by doing a rate switch. Generally, in terms of cost of mortgages and loan to values, have you noticed any difference with the crisis we're in right now?
Having conversations with mortgage brokers, a lot of them were feeling that they were waiting for a drop in variable rates or discounted rates or even fixed rates over 2 and 5 years. They didn't see that, and therefore it appears that mortgage broker, or certainly the market, is taking the view that there is risk and they're pricing in that risk. And one would have assumed that I think trackers are where you already have a mortgage in place and there's a tracker.
I think we may have lost Karim, but Mo, I mean, whilst Karim's trying to dial back in, any sort of insight on the mortgage side?
Yeah, so I think what I've seen is that we were expecting some sort of rate reductions across the board for buy-to-let mortgages and mortgages in general. That's not happening at this moment in time. Lenders are still very cautious. Loan to values, because of the valuation situation and the inability of valuers to actually get out, lenders are reducing their loan to values, and in some cases not lending altogether because they can't ascertain the value of the security. So I think it's really important at this time that if you are looking to get a new mortgage, then consider that. But also with your existing mortgage, as Karim was saying, I think it's important to look at what you can do in collaboration with your lender to try and make this, the impact of this situation on you less adverse.
Okay, let's change tack slightly and look further ahead. Mo and Karim, what's your outlook for the buy-to-let sector more generally?
I'll go first if that's okay. So I think obviously you've got to look at it in the macroeconomic sense first to understand what the impact of the slowdown in the economy is going to do to people's incomes. We may see a reduction in rents. As landlords, we may have to consider reducing our rents in order to fill and tenant our properties. I also think that there will be no let-up in the regulation that we've seen that applies to landlords. So with regards to making sure that properties are well kept and are safe, but also in terms of taxation as well. So I think in terms of the longer term outlook, there is always going to be demand for properties because of the country we operate in, or the jurisdictions we operate in. But I think the main issue really will be around whether or not affordability is there for renters to actually rent the properties, and even people to sell as well, whether they can sell or not.
Yeah, Karim, what are your thoughts?
I would agree with that. I think the increased regulation coming into the market, and especially with on the legal side, with getting properties back through Section 21, there's a lot of discussion around that arena. The increased regulation on the Energy Act, property licensing in some London boroughs is coming in, and the increased taxation, especially on buy-to-let landlords owning a handful of properties, is getting more onerous. And I think landlords really need to think about whether they actually need the income from those properties to live, or if they could do without the income and place in some sort of corporate structure, which at the moment seem to have or be more tax advantageous.
Yeah, so it seems to be a bit of a professionalization of the sector, and you're getting larger, more institutional players coming into the build to rent and things like that. Yeah,
there are voices, and I think it's wise for us as a community to maybe look at some of the trade bodies that are out there and trade associations that are out there. So we may want to look at places like the National Landlords Alliance as well, and the Residential Landlords Alliance, who are actually lobbying the government to delay some of the regulation until after the crisis, so that we can get the sector back up on its feet. But I think it's important to tread carefully and really evaluate, as Karim said, what your objectives are longer term. How dependent are you on the income from these properties, and whether or not you can be creative and innovative in finding structures that might work for more landlords.
So are you guys looking to add to your portfolios this year? Maybe we can start with Karim first.
I think one of the things that we're looking for is certainly doing better with the financing around some of the properties. And this, I think, one thing that this crisis has brought up is critically looking at the income and the cost base of the properties. And if we can make them as efficient as possible, that's one of the first things I'm looking at. The second thing is making sure I'm on the best rates that I need to be on. And the third thing is making sure whether I actually can live without some of that income, and whether to make look at the portfolio and put it into some sort of corporate structure to take advantages of that. And I think the other thing that's highlighted throughout this is working more closely in partnership with your tenants, because we see this kind of landlord and tenant relationship, and each one's trying to maximize, or one's trying to minimize the rent they pay, one's trying to maximize. But I think there's a general feeling that everybody needs to work together to get through this crisis.
Yeah. Mo, what are your thoughts?
I would say there are going to be some distressed sales. It's worth keeping your ear to the ground, speaking to agents regularly, looking, each landlord should really know the area that they're operating in terms of location and what prices are, and whether or not the certain assets look good value or not. But I would say getting new mortgages is going to be tricky. So if you do have free capital that you're not dependent on, it might be an interesting idea to look at how best to place that going forwards, and whether or not you can pick up certain properties at a discount. But obviously that needs to be tread with caution, and you don't want to enter into that situation too early and then face further issues. And at the same time, maybe looking at it longer term and saying, okay, if you're going to place that, how are you going to actually leverage your capital in future, and maybe refinance out the cash that you've put in. So I think there are creative ways of looking at it, but obviously each one needs to be assessed for its own merit and contribution to a landlord's portfolio.
Yeah, I think I agree, because there seems to be a lot of uncertainty at the moment with the economic impact of the coronavirus, and whether that means that because of job losses or reductions in salaries, that affects tenants' ability to pay rent, which actually may reduce the rent. But on the other hand, in the last crisis, what we saw is people don't buy, and if they don't buy, they need to live somewhere and they need to rent, and actually rents increased in some parts of the country. I wonder if you have any final thoughts on that dynamic, on what might happen to rents.
I would say overall, depending upon how the economy goes, rents could in the short term be reduced just because of trying to avoid void periods. In the longer term, I think the demand and the macro situation and long-term situation with the market is that more and more people are renting. New generations of occupiers don't wish to own, they wish to rent. That's a trend that's been part of the sector for some time. I would say that, just finally, maybe we need to think about ways of coming together and creating some sort of strength in numbers. If you go to a lender with a proposition of 10 or 20 or 30 properties as opposed to 1 or 2, you may get better deals in terms of lending and finance. The same applies for management and across all the cost bases that Karim mentioned as well. So coming together to build well when we come out of this crisis might be something we wish to consider as a community.
Some final thoughts. What are the key things that landlords need to do in this environment?
I think the crisis has told us to look more critically at our portfolios, think about whether or not you need the income from that portfolio and how you hold those and how your loans are structured on those. Have a look at your rates and whether you can do a rate swap to make more advantage of the lower interest rate economy. And also have a look, speak to your tenants, because in this environment, landlords and tenants are effectively working together to minimize voids and help them. Especially if you're a smaller landlord with a smaller portfolio, you may know your tenants personally, and you may be able to give them assistance where they need to fill out forms for housing benefit or universal credit, for example, because that will benefit both of you in the longer term. And I think also wait until the crisis passes before making any longer term decisions on how you want to build your portfolio.
Great, that's fantastic. Guys, thanks very, very much. On behalf of the Economic Planning Board, I want to thank you both for your time and valuable insights today. Thank you.